Hello, everybody. Today I want to talk about Rocketlab. So, Rocketlab is a specialist in small rockets. They're actually a pretty old company founded in 2006, and they specialize in launching small rockets that will carry small satellites. And actually, in 2022, they did 9 launches. They cater to both government and civilians, and they do a lot of good things. They, for example, had a successful mission with NASA to send objects to the moon, and so that was this satellite right here was sent to the moon, and that was very impressive. They have many partnerships with NASA, again with Artemis, the Artemis mission at NASA, so strong ties with some of the government research. They can apply to a lot of governmental research projects. They also are just starting to implement things like reusability in their rocket, which is kind of something that they're following on SpaceX, but they're using parachutes, and they're trying to democratize the launch of inexpensive rockets for small satellites. One of the ways that they do this, by the way, is they use a lot of 3D printers, and 3D printers enable them to really make that product cheap. So the way I would look at Rocketlab is they are a provider of launch solutions for very small satellites. And these rockets are actually pretty small. If you look at the size of humans next to the rocket, you can see that they're taller than the rocket itself, which is significantly smaller than, say, a SpaceX rocket. So they specialize in that, and they're a low-cost leader in that, and that is good. One thing that I like better about this business is that they're trying to become a vertically integrated provider of satellite services, and they're trying to do satellite design and satellite launch, as well as software, providing software to take care of a satellite. And they also provide a lot of components for other satellite makers. So they do much more than rockets. For example, they focus on radio systems, separation systems, solar systems, and space software systems. So overall, this is a pretty diversified, tiny company in the small rocket space, and that's very interesting. And when we get to valuation, you'll see why I think this stock is expensive, because this stuff costs a fortune, right? This type of IP, intellectual property, is very, very special. Very few companies have these capabilities, and so that's why I think the valuation of this company, per my taste, is actually a little high right now. But let's go ahead and get started with the numbers of my analysis. So let's look at revenue growth. Revenue growth was substantial at 88%, but actually, when you dig deeper, I didn't put it in this slide, but when you dig deeper, you notice that quarter over quarter, they're down 18%. So 88% versus 18%. Now, that is okay, because space revenue is very lumpy. These contracts take forever to agree on, and then you have a launch date that needs to happen. There's so many bits and pieces that need to happen for revenue that you're going to have a hard time having a smooth revenue growth quarter to quarter, just because of the nature of the business, right? They only launched 9 rockets last year. So obviously you're going to have lumpiness in the revenue as to when they recognize that revenue for the launches. And much of the revenue actually is derived of space systems. And so it would be a matter of looking deeper as to what's being included in that in space systems. But I like that space systems themselves make more money than the launches. Although you'd have to look at the component of each launch. How much is that launching those space systems? I think is a good question. Analysts expect 93% on over the next 12-month revenue growth, which is excellent. It's very good. Now let's look at the competition. They have SpaceX, the elephant in the room, right? That's the main competitor. And we also have many national players that are competitors, like Orion Space for Europe. That would be an example of that. These are any rocket launchers competitor. I would argue that in their satellite business, they have Kratos Defense, which is an Israeli company, which has a big satellite and a rocket division that I would argue is a competitor of Rocketlab. And they have all of the legacy space business. And so, for example, Boeing, for example, would I believe be a competitor in my view. But no pun intended, the space is big, right? It's a very big space. So I wouldn't read too much into the competition because space is one of the next big things, right? It's a mega trend. It's a mega trend, and therefore I wouldn't read too much into that. Also, one more thing is that a lot of their competition is going bankrupt, right? Virgin Orbit went bankrupt recently. So as competition goes out of business, you have fewer and fewer players that stay and that get a larger share of the business. One thing that concerns me a little bit about the competition is that Falcon 9, which is the rocket of SpaceX, right, started doing these rideshare missions. So in a rideshare mission, you would launch plenty of different payloads for different companies. And so they did a recent launch on Falcon 9. I don't follow that too closely, but they did a recent launch per my research I was reading. And in one launch, they were able to send 110 satellites in a single launch. So I would argue that although you could go to Rocket Lab to launch just 1 or 2 satellites, you could also do some ride sharing on a Falcon 9 rocket and be one of the many rockets that get sent by SpaceX. So again, the shadow of SpaceX in competition here is pretty big. As far as the concentration, yes, there is, but compared to the space, it's nothing alarming. I believe they have a medium sensitivity to macro because these are long-term projects. Sure, right now companies are less likely to spend, $10 million on a satellite. They're less likely to spend that right now on a micro satellite, a tiny satellite. Bigger satellites cost much more. But nonetheless, I think there's going to be some tightening. We're going to feel some tightening in the economy, just like most companies. Now, the growth runway, all I have, and we're lacking a lot of their view of a total addressable market, probably because the opportunity is so far in the future. But 30% of the globally addressable launches where included some of that technology, some of that space system technology that they sell, some of which they got through acquisition. So that's major. And 90+% of spacecraft featured some level of their technology. So they have a royalty component, or kind of a component where if the whole space, the space of space grows, they're going to get revenue from that because they are a supplier of parts to many other big players in space. And I like that. I like that a lot. I think this is good. Now, growth by acquisitions, orange flag here, they've had a few. And so you can look them up. They've had a few acquisitions, 45 million, I think the most recent one was, which to me is a medium flag for this company because at 45 million, it's quite a bit of money. This is a $1.4 billion EV company. So that matters. As far as the SG&A and R&D expenses, and notice I'm doing non-GAAP here, but they're going up. First of all, yet the revenue is going down. So we can see that there's a decoupling between this company investing in R&D and the revenue. The revenue of this company does not drive its R&D spend, and that's because they're developing new products. To me, this company fits squarely into a pre-optimized for gross margin, pre-revenue almost type of company, right? They're developing. If you read their reports, it's all about developing the next product. One of the products that they're developing right now is a new rocket that's going to be about 50% the size of SpaceX Falcon 9. So then you have to ask yourself a question. This is a rocket that's going to be designed to launch a constellation of satellites, right? Multiple satellites at one. They have a payload of 13,000 kilos. Falcon 9 has 25,000 kilos as the payload. So it seems to me like they're developing a mini competitor against Falcon 9. And I am not sure I like that. I'm not sure that's the right way to go. Or in another way of saying, it's the validation that they figured out that they need to launch tons of satellite per launch, and therefore they're developing a new rocket. I like that as a lover of technology. I think as someone who loves technology, that's amazing. But as an investor, I am worried as an investor because this is extremely expensive to develop, as we know, right? All of the space programs, whether it's Elon Musk's SpaceX or even the government administrated space program, they cost a fortune to develop. And so as an investor, I have to ask myself, do I want my capital to be poured into development? Speaking of capital, let's talk about any near-term bankruptcy. Is this a thing? Could this be a thing? Well, their cash burn was $82 million, and they have a $315 million net cash position because they have a little bit of debt. So that means they only have 3.5 years of cash runway. And remember what I said here. Expenses in cash, right? Non-GAAP cash expenses, they're going up. So you're increasing your expenses even though you know your revenue is down 18%. You're clearly going to be using that cash pile from the SPAC. The SPAC, there's $315 million left. So 3.5 years. It's a little close for comfort when I know that they are developing this. Right? This is expensive stuff. So when I know they're developing this, it's a little close for comfort. I'll be honest. It's you got to be careful. Now the gross margin, this is from their latest presentation, 8%. That's I mean, this company is not optimized for gross margin. That's why I'm being facetious here. But are we running a charity? Are we in the business of running a charity right now? Are we a Because, I like I said, I can't imagine how much more capital is going to have to be invested to invest in all of these new products and all of these new, well, especially this one new rocket. It's going to take a lot of capital, and you need to be able to spread those fixed costs across multiple launches. Right now, the fixed costs are going up quite a bit, but I'm concerned. I think 8% is way too low for my taste. Again, to me, this is a pre-revenue. This is an R&D company. This is a company that's valued on the basis of its technology and its capabilities. A lot like a biotech, in a way. It's valued a lot on that rather than being valued, in my view, on their actual numbers, right? And their actual gross profit and revenue growth and expectations of positive cash flow at some point and later profits maybe. The debt, like I said, 156 million. They have debt. It's okay though, because they have 471 million in cash, and so net cash you get by dividing, of course, 156 minus 471. That's your net cash position. The dilution's been okay. They've had a lot of dilution over the past 4 quarters, but you can see we've been essentially flat on the dilution over the past 4 quarters on a quarter-over-quarter basis. This is year-over-year on a quarter-over-quarter basis. So waiting for Q1 of 2023, we would want that green bar here on macro trends to be 0, right? Because if it stays flat like this, it's going to be 0. That's what I'm hoping for, right? You don't want to have a lot of dilution. It's a green flag all over for insider ownership at almost 12%, and the company is still founder-led. This is very good. Now, moving on to another thing that is not too good is revenue per employee, 150,000. That is not good, which all it says here is that this company is not optimized for my usual lens of analysis. Like I analyze companies that have begun the product adoption curve. This is a company that has not begun its product adoption curve. They're still heavily developing products for the future. So, unsurprisingly, knowing this, it's unsurprising that the stock has been crashing. And by the way, it's funny. This stock hasn't really crashed more than any other SPAC, which is a proof that the market really doesn't distinguish and doesn't really care. Like it's the same pattern for everything. But this stock has crashed. I would argue the fear right now is that yes, like, if they run through their cash within 2 years or 3 years, what's going to be the funding environment? Are they going to be able to get more cash since they are still in this R&D mode? And because they are in this R&D mode, it's a little unfair for me to use my spreadsheet, but look at it. But you see that this is a company that, compared to the average stock that I analyze on the channel, is significantly overvalued. Significantly. Like if I had it in my Friday spreadsheet, it would make the top 3 most expensive stocks in the spreadsheet. It's not surprising. It's not a company that I would analyze because this company is mostly optimized for R&D. It's mostly optimized for developing new products. They're in a development stage. They are not in a gross profit earning stage. Therefore, unfortunately, and I know some followers of mine love Rocket Lab. Unfortunately for me, I'm just talking for me, I will not be buying Rocket Lab. I have to stay disciplined. I think it's an extremely cool company. I've watched a few videos of a founder. The founder is very inspirational. These rockets, they look very cool. But to me, I look for companies that are closer to beginning mass adoption. This company, in my view, mass adoption has not begun. But there's an investor that's known to take more risks than me, right? And than a lot of people. And it's Cathie Wood. Cathie Wood is known for this type of stock. Some people could call them moonshot stocks, and in this case, it's well intended because they did send a satellite to a moon. So actually, Cathie Wood is known for just loving this type of company, and she's an outstanding investor. There is no denying that. She's had amazing performance in her fund, and therefore I'm not surprised to see that Cathie Wood owns Rocket Lab in 2 of her ETFs. So she's seeing something that I am not seeing. Maybe she's right. She may be right. It's just that for my taste, I'm thinking I want gross margin to be at least a little bit optimized. Like give me at least a 30% gross margin for me to start getting interested. I'm not equipped to analyze these stocks. Cathie Wood is a lot of people are. But nonetheless, that doesn't subtract anything to this company. It's fascinating that you can have such a small player launch satellites and launch rockets. We are living in a world of near science fiction, if you really think about it, because 20 years ago it was only the most powerful states that could do that, and now you have a company that's not that big who's doing that, right? Significantly smaller than SpaceX. SpaceX, for example, in private valuation is at 150 billion. So this is a company that's 100 times smaller than SpaceX on a valuation basis, and they're able to not only launch small satellites with small rockets, but they're also able to develop a product that's going to be half the size of a Falcon 9. So thank you so much for watching. This was not investment advice. This is just entertainment. Appreciate your likes. Appreciate your subscribe. Have a wonderful day.